I think we've had a fantastic quarter. I think across the board, we've executed extremely well and we've delivered excellent revenue and margin performance. We're also very happy that this has again been one of the highest booking quarters. You might know that 2 quarters back as well, we said it was the highest booking quarter. So this is the 2 quarters in a fiscal, we've had the highest booking. Right. And we've had a very good revenue growth. And the revenue growth is across every segment of our business. Our Mode 2 business has grown 13.3% quarter on quarter. And all of that is organic growth. And Mode 1 has also grown at a healthy rate. Mode 3 has also grown. All geographies have done well. Like all the geographies are in double digit. And even our rest of the world is in double digit year-on-year growth outside India. Yeah. So coming specifically to the organic growth, when in the beginning of the year, we said 5.25% will be organic. And now we are guiding towards the upper end of the range. So hypothetically, if you take 11.5, I think about 5% will be inorganic and 6.5% will be organic. And we will see how this quarter pans out. We still feel very optimistic about a lot more that can be done.
Okay, that's great. That's good to know. What this entire quarter has seen, and is for the entire industry, is an uptick in people's costs. I have seen that employee benefits also rise to a certain extent. Your outsourcing costs have also gone up. The question really is, if the entire industry is talking about a talent crunch, a supply situation here, in your experience, how long do you think it could take before things can get better? If this is a cycle, or what phase is this in?
Yeah, talent crunch, I mean, the way we are addressing is twofold. One is significant amount of focus in reskilling and developing our own employee base. That's the biggest driver. The second one is on localization. If you look at our presence, we have 120 plus delivery centers outside India. And 61 of them have capacities greater than 100 people, and some have even over 1,000 people. We took these localization initiatives as a very big agenda even 10 years back. So we have 2/3 of our employees in the US are locals. I think some of these proactive steps that we took over the last several years is helping us in good stead to address the increasing demand. And that's why we feel very confident and positive, even from the supply and fulfillment perspective. And this quarter we added 4,500 odd people, so at least 3,300 plus would be organic, right. And that's a good growth in headcount as well.
Okay, Prateek, can you come in on this aspect too? Well, how are you reading costs? How are you reading an increase in costs because of this supply crunch? And again, if you could tell us about perhaps some implications on margins for this quarter.
So, we were at 19.9 last quarter.
Yeah.
We are at 19.6. And that drop of 30 basis points is basically because of costs increasing.
Okay.
The fact remains that when you have such a huge 5.6% quarter-on-quarter sequential growth, it will come with a little bit of cost as well.
Sure.
And what you're seeing in the line item by line item is largely due to that. But then there is this 30 bips extra that is there as well.
Okay. Could you also tell us? Yeah, sure. So could you also tell us about how utilizations panned out, perhaps a little more on currency and several other factors that also, move on margins? And now you already clarified that 30 basis points is because of employee benefits. Yeah. Then where is that, compensation coming in from?
Yeah. So this was the second quarter of increments that we had. We scattered it over a few quarters instead of all being lumped in one quarter.
Yeah.
And so the increments was a lot larger than that. To your point about Forex, there was a lot of fluctuation during this quarter. In the end result for the quarter, it is 15 basis points of benefit.
Okay.
So the 30 is the net amount, and therefore the 45 is the real reduction in margins, because 45 basis points is the real reduction in margin on a quarter-on-quarter basis.
Sure.
Like I said earlier, increment was larger than that, but then we were able to offset some of that with productivity benefits.
Okay. CVK, let's come to application services. If I consider the last 12-month growth, we've seen about 1.8% uptick there. Again, a third of your revenues come from this particular area. The question that I get from a lot of shareholders in general is that they would really like to know about what HCL Technologies can do to perhaps spur growth here. What are the challenges as well here?
Yeah, application services has three components. One is the traditional application support and maintenance, and a little bit of traditional AD kind of work. The second one is on the enterprise packages such as SAP, Oracle, and things like that. And the third is all the digital analytics, big data, SaaS, and some amount of IoT-driven application work. Right? So if you look at these three buckets, definitely our overall digital applications, modernizing, all of that is growing very well. A big part of that is reflected in the 13.3% quarter-on-quarter growth on our Mode 2 services.
Right.
Now, there is continuing pressure on the traditional SAP kind of work, because a lot of that work is no longer happening. A lot of that is getting into cloud, and we are also ramping up on SAP cloud and other areas, but still I see some pressure on that area. And the traditional ASM AD space is also under pressure due to automation and productivity and other things. So the outlook for this service is to continue to accelerate our digital services, which we are doing very well. Right. And we've done very well this quarter, and if we continue this clip, it will start reflecting in our application services growth as well.